All right, hey guys, Sam here. I thought this would be a good time to do a little update on Bitcoin. So clearly, we've got a correction underway and some real volatility. Now it's interesting if you have followed some of the material that I've been forwarding on the Twitter feed, or just if you're on Twitter, as I suspect that you are. A lot of opinion about what caused it, why it's happening, what agendas are, with conflicts of interest, etc. It really, while it's interesting to us as technical traders, it really doesn't matter. What matters is that we've got volatility, and we can analyze it and be calm about it, and look at it and see if we can position ourselves to take advantage of some of this volatility, because it's very likely creating opportunity. So I thought we would approach Bitcoin as though we were coming to it fresh. We had no bias, no agenda, nothing other than we were staring at a chart for the first time. So I've got the daily chart up here. This is on Kraken. And if you were approaching this with this methodology in mind, it would be really relatively straightforward. So, of course, first thing we'd look for is fib pulls and evidence of algorithmic activity. So, just keeping it very simple, we'd go to the most recent low we can spot. That's a nice place to pull as it's wicking the 200 period. We'd pull to the high and see what we get. Well, okay, so clearly we have evidence of algorithmic activity. So we get the first test here at the 38. We don't quite make the 50. The 50 period holds it up. We don't get a new high. Back down we go. There's our hit of the 50. And from there, it's straight off. And we get up. We hit our target of 23. We get a little reaction. Then we're to and through the 618. And we're just shy of the negative 100%. So, clearly that's impulsive activity. It's a raging bull market. I mean, anyone can see that. So now the inevitable correction is underway. What can we deduce from the action that we see here? So I'm going to take this down just so it's easier for us to get a little bit of analysis on this. I'm going to take this down to a 12-hour. Okay, so here now we can see, again, as I will often reiterate to you, when Elliott wave is useful is when it's just staring you right in the face. So clearly we can see a 5-wave structure here. Any novice Elliottian can see that we've got that structure there. And now we're right, fundamentals of Elliott. We go up, the trend moves in 5s, corrects in 3s, whether it's up or down. So in this case, we've got a clear 5-wave sequence up, and now you can see we've got an A, a B, and a C. So we have the potential for just a typical Elliott wave cycle here. Impulse followed by correction. So we'd just then, again, we're always trying to build a case around any sort of level to see if we can get a confluence of technical indicator structure, a pattern to give us more confidence for an entry into the market. So if we're looking here, well, of course, we'd want to go check and see how the market's been responding to these levels. So this is the beauty, right? So we get the 382. It's front run. Remember, the stronger the trend, the more likely we are to turn on the 382, not quite make it to the 50, and then we go right up to the negative 23, almost to the tick, and we have profit taking. So that was to be expected. Now, if you've been following me for a little while, you know that I was trading this on the assumption that the 5th wave was not complete, because historically, and if you look back over thousands and thousands and thousands of wave structures, in the 5th wave, it's unusual to not have a retracement that at least tests a 50%. And we didn't have it. That's why I was bullish all the way. The deepest we had here, we didn't even make a 38. That was the deepest retracement we had within that entire structure. So when we were up here at this high and we came back down, we hit that 50, then we reacted just above the 618. Those are reactions you'd expect. My premise was that that was a correction of a larger wave. So we didn't have a fifth in, and the fifth was likely unfinished. Just off of that, just that's a tendency in Elliott wave, and right, nothing's perfect, and there's always variance in this structure. There are rules, but there's nuance to it. But this is a probability. So the fact that we had not had that depot retracement led me to believe that there was an opportunity to trade from the long side for us to see new highs from this retracement here. Didn't happen, right? Didn't happen. So, clearly there was evidence that this was potentially our top. We had excellent five-wave structure. We had the perfect tick of the negative 23.6, so we know algos were taking profit there. We came back down, got the reaction. We fail, and now we've got this news-driven, commentary-driven reaction that we're seeing here. But we can look at this and again, keep it relatively simple. There's no reason to be panicky here. There's no reason to do anything out of the ordinary in terms of approaching this for the next trade in this sequence. So let's pull some of this off here and now analyze it. Well, what we know here, just simply looking at this, is that we've likely got a correction underway of this entire impulsive structure. So where's the first spot that we stop? Right at the 23. Right, almost to the dollar. So this would be a common place for the market to react. And that's what we're seeing here is the reaction. Now, we also can look at this and see, well, we have an interesting event here where we have the 50, the most common retracement, the retracement we'd be looking for and expect algorithmic buying, is down here, which happens to coincide with the 200-period moving average. So, whether or not we're done here or not remains to be seen. We are getting a reaction here. I did fire off a trade this morning. I went long in this in a small position because of the good structure, as I sent on the Twitter feed. You may or may not have taken action on that. It's reasonable to wait and see. Always the safest play is to look for a reaction, see the market move away, come in, put in a lower high, and that's your entry. And that way you can enter the market with a relatively tight stop. So there's much lower risk, and all that great reward is there as we would be pushing for new highs. So whether or not that is the low, we don't know. We know historically we saw that not quite make the 50. It wouldn't surprise me if this is a solid low. Of course, we'd be operating under the assumption that we have. Sorry, guys. We have this. Let me get this. Sorry. Let's try that again. Okay, there's our classic ABC. Classic ABC. And we have some fib relationship there that's meaningful to us. So often we know we can look for 100% being a common target. We actually got through it. Right, so here's next potential would be the 1.272. We didn't quite get there, so we have kind of a pocket here where there's a potential for a long entry. Again, it's not something to be overly aggressive with, but there's a reasonable trade there. If we go down to a smaller time frame, let's go down to an 8-hour and look at this. So we're getting a reaction off the 382. Not surprising. We're getting a reaction. We don't know if that's a good low yet, but at least we're getting a reaction. So if you were long there, it's not unreasonable to tighten up a stop there. We'd like to see a strong reaction and get at least a green candle. We don't have it yet, but we are seeing that reaction. And we had this structure here. That's what I was looking at this morning, which makes that kind of interesting. Remember, we're looking for this confluence. Can we look at some additional data? The other thing we got to be aware of is could there be some algo activity that's pulling off of this low? So if we pull up here, now we see we've got this little window here. So we've got kind of a confluence of structure and fib counts that are forming here. And I would say right in here, we've got a potential buying zone. So how do you know? Well, you don't know. You don't know. We can add some additional data. We can look at this and say, well, we had a swing high here. We came down. We retraced a few ticks from the 50. We come down. We're through the 23. Now, look here. Now, we've also got the negative 61.8 right in our little pocket, right in our little window. So we're getting more evidence that we may have a target zone here. It's unusual for a market to retrace to the 50 and then go beyond the negative 618, but it does happen. And then here we'd have our next buying zone. Down here, we would break that channel structure, but here we'd have the larger 50. We'd have the smaller range when we're drawing from this pivot low here. We'd have the overlap of the 618. Right, so we'd lose some of this structure that we have with the channel, but if we're going to break this, this is our likely next support zone, and we can see over here we had this little pocket of indecision where the market stalled. So reasonable if this trade here doesn't present us with the ultimate low before we start moving higher. If we do get stopped out there, this is a reasonable spot to look for a next entry. Right now, we're getting the reaction off of the channel, off the 382. Again, we don't know if it holds. We can add the oscillators here to see if that's going to give us any supporting information with regards to timing. And we see, I always think of it as energy. Do we have the potential energy buildup here? We're 2 standard deviations from the VWAP. We don't have divergence in the oscillator here, but we certainly are set up with some energy in the RSI. So we're just getting below 30. So we have the potential for that energy to push the market at least to challenge the upper part of the channel. Then we'd be down to a smaller time frame, determining whether or not we've got some sort of impulsive count that we can start to look for in terms of indication that this correction is over and we're starting impulsive movement to the upside again. So right now, that's how I would look at that. Channel support and this little confluence of fibs tells me that there's a potential for this to be the low. Nothing more than the potential. So a reasonable spot to take a small position because we've got excellent upside. So of course, if that is our low, we've got keep that relatively tight. 12 to 1 risk reward, 12 to 1. Right? So, you can afford to take a trade like that and be stopped out multiple times. It just takes that one trade that runs on you to compensate you for all those small losers. So even if you just look at that, you can just look at the risk reward potential from the risk here to our potential reward. That's how you make money trading. And it's just a constant process of looking to enter the market where you have that kind of risk reward scenario, knowing and expecting that you're not likely to hit it as often as the times that you'll be stopped out. But it just takes that one time when you get it, and then you have the opportunity to add to compound your gains when you've got that roadmap unfolding before you. So you have the opportunity to reduce risk, to add with house money, to really compound the opportunity for that time when the market is moving as you anticipate that it will. So with that, I'm going to wrap on this. I will be back with updates on Ethereum and Litecoin and a few other of the majors, and keep an eye on the Twitter feed as I'll continue to update as I see material that's interesting, either to read or charts that I think will be worth you taking a look. Okay, guys, that's it for now.